Welcome to ShortView Trading. This is your morning market hit for Thursday, 28th of January. What matters today for traders? Well, clearly the pullback has begun. Cracks are emerging further in financial markets. Risk assets down across the board yesterday, and that was despite quite good news flow. Earnings beats after hours, for example, from a number of major tech companies, yet the S&P moved lower still. Positive, dovish remarks from the Fed, both in the statement and the press conference, yet markets have moved lower both yesterday and overnight. And some of the weakness, of course, is showing up in areas of the financial market where froth and excess has been building in recent weeks and months. In Asia, for example, moves in certain indices like the Vietnamese market had been parabolic. It was up 52% since July, but it started to crack. If we look in the US, the Philly SOX was the worst performing major index yesterday, down 5.2%, having delivered some of the strongest gains, rallying 40% since its October low to its recent high. And cyclical parts of the market, which were strong in early Jan, have come under pressure, with the Dow Jones Transports Index rolling over quite sharply. So excess in markets is beginning to unwind. In our daily trading publication, we've been recommending short positions in US equity futures. The reason for that is the sell signals we've been getting from our short-term models. We update those models every day. We publish them alongside our trading recommendation in our daily trading piece, available on our website and to subscribers. One of the key reasons for moving short US equities was the message of this indicator. It's our sell-off indicator, designed to warn of waves of risk aversion in global markets. And it does that when it reaches a reading of plus 20, which it did earlier this week. And that tells us that risk-seeking behavior has been persistently strong. It's become overextended. That's normally what happens before pullbacks. Markets have weakened, of course, yesterday and overnight, so the model's closed out. It's successfully done its job. The key question, therefore, is where do we go from here? How big will the sell-off be? What shape will it take? We have a number of short-term indicators that help navigate the twists and turns of pullbacks. They're available on our website. As well as the short-term models, though, we're also watching the price behavior of Bitcoin, which often leads equity market direction, especially at key turning points. And its message in recent weeks was pretty clear. Usually, though, sell-offs in markets end when fear has risen back up to high levels. Some indicators are highlighting fear creeping back in. The VIX, for example, spiked to 37% intraday yesterday, highlighting that pickup in fear. Of course, it can go higher. Other indicators, though, like this one, are still highlighting complacency in markets, with little sign that portfolios are well protected to the downside. So for how we're trading this market, have a look at our daily trading publication available on our website. And what are we watching today? Well, in terms of data, we get the German CPI reading for January. We also get the Conference Board consumer confidence number. Most importantly, we get the first read on Q4 GDP in the US. That was your morning market hit. Do follow us on YouTube, search under ShortView Trading. Join us on Twitter, LinkedIn and Facebook. Thanks for listening.